Here we go. Stocks by the numbers. Welcome back. And quick Fubo update here. I got some family downstairs, so I'm just going to run through some numbers quick. But obviously, stock down to the low threes, down about half a point, roughly 14% today. On the news that they slightly missed revenue, guidance moving forward seems a little weak. And of course, they cited that they may see a drop in subscriber growth moving forward. So we obviously saw a big chunk down in the stock. And, you know, in my opinion, I still say you have to deal with the short-term volatility to get that long-term growth. This low right here on this candle was 305. Stock rebounded to 308 after dropping down to 256. Almost hits this 253 fib on the 1 year, and then rallied back up to 3. Almost closed at that previous low, but not quite. So we might start to see like the tightening down like that. And believe it or not, you could potentially see the low twos, maybe even the 190, 180 level, believe it or not. And I know that might scare some people, but you know, in my opinion, I still like the long-term growth. The main issue was the legal battle with Disney, which is cleaned up in theory, and I believe they also gave Fubo like 200 million or something, right? So in my opinion, Disney wouldn't have done what they did if there wasn't value there. And even when the stock, if you recall, even when we got the news here with Disney and the stock ran up to 4, 5, there were people saying, oh, I'm buying more, I'm averaging up, I don't care what the stock does over the next couple of months. You know, now they have Hulu. There's, what'd they say, like 6 million people who use Hulu or something like that. So, you know, down the road, it's going to be huge. And, you know, I don't care what happens here because I'm looking ahead 2-3 years from now. And that's what I usually always say when we talk about these smaller up-and-coming stocks, right? You have to deal with the short-term volatility to get that long-term growth. So right now, in my opinion, I do still personally own shares of Fubo. I did not sell any shares of Fubo. This did not scare me out personally. Again, this is just my opinion. Whatever you do with this information is entirely your own prerogative. But in my opinion, I'm not worried. And, you know, if I had more cash on hand with the stock here in the 3s and the 4s, now it was $2.50, $3. In my opinion, I probably would have bought more. If I'm able to get some cash over in the next week or two and the stock does pull back to 240, back here to like 220, in my eyes, I would be all over it. Because again, the stock got up to almost $4 back in 2023 on its own merits. Since then, the company has grown, which means realistically the stock should be between 4 and 5. Then we got the Disney news getting absorbed for the most part. And we have Hulu also now coming under the Fubo umbrella. So that's why, in my opinion, I'm still looking up here. But that's just me. You know, you may have seen this earnings report, got upset, hit the sell button. So, you know, believe me, we're all different. But here you can see loss came in lower than expected, loss of 11 cents a share. Analysts were expecting a loss of 17.7 cents. Really nice beat on the EPS side. Revenue, they chunked up the estimates, as you see, last quarter, 370. Even before that, the company was bringing in 390, just broke above 400. And you can see estimates jump up to 445.78 million. The company did make a valiant effort and came pretty close, 443.28 million, missing by about 2.5 million, roughly 0.5% of that estimate. So we're not necessarily beating the stock up because of the revenue miss. We're beating it up because they guided for a potential subscriber decline. And that's why everyone's jumping ship. But I will remind you this. First of all, there were quarters where we saw the company beat. We saw subscriber growth increase, like 20%. And they still brought the stock down because Wall Street was looking for, like 24% growth or something. You remember that? So they brought the stock down even when they had a good quarter. And then, of course, it ended up bouncing right back. So, in my opinion, I really don't view this as a big issue because there was also, I believe it was about this time last year when the company started off 24, if memory serves correct. I might be wrong. But they lowered full year revenue guidance. You remember that? And I said, yeah, they said that now it's technically a negative. The stock went down. I said, but they're slightly beating estimates for the last couple of quarters. So give them 1 or 2 quarters, and if they're slowly still ahead of schedule, then they might come back and reiterate the original revenue guidance that they had, right, before they lowered it. And if you recall, that's exactly what happened. So that's why even right now, we're looking for a decline in subs. The stock's taking a big hit. Again, in my opinion, give them a quarter or two, and for all you know, we might start to see subscriber growth come back into the stock, and they might readjust, their outlook. So only time will tell. In my opinion right now, again, after this big drop down to $3 a share, I'm not worried. But that's just my opinion. 443, slightly below estimates. 1.7 million paid subscribers, up 4% from the same period a year earlier. For the first quarter, company expects revenue growth of 4% at the midpoint, between 410 million, below the 624.7 million forecast by Wall Street. So technically, that is well below Wall Street's estimates, but we have to wait and see, of course, what happens next quarter, because it doesn't, as I always say, it's not a massive issue until it's a massive issue. Fubo said its outlook factors and the potential effects of subscribers of its recent contract non-renewal with Televisa Univision, there you go, that followed a pricing dispute. It expects to end the first quarter with around 1.4 to 1.5 million total subscribers, representing a 4% decline at the midpoint. Again, in my opinion, I don't view it as a big deal. Because even when we saw the growth, they were viewing it as a negative, right? So you're telling me, oh yeah, we might lose some subs this year. I mean, in my eyes, it really doesn't seem like a big deal. But again, that's just me. I'm sure there's people out there who are like, oh, this stock sucks. It should go back to $1. What are you talking about? So again, we all think differently. However, Fubo, first brought to you on this channel at $1 a share. Stock recently hit $6.45. Projections are down. Foreign sector slated to reach between 330,000 340,000. Slowing down in subscriber growth there as well. Revenue up. This number is incorrect, I believe. But 7.8% rise year before. Overseas customer count dropped 11% to 362,000. North American subscribers climbed 4%. Average revenue per user in North America came in $87.90. Foreign revenue per user was $8.50, somewhat below predictions of $8.90. Not a big deal in my opinion. From $84.4 million the year earlier, the corporation reduced its net loss to $40.9 million. Getting rid of almost over 50% of that loss. From a loss of 24 cents in the previous year quarter, loss per share dropped to 11. Firm announced 2-cent per share adjusted loss above projections of 11 cents per loss. So it seems like now we tried to kind of put the path to profitability that they laid out for 25, and we're trying to, again, trim our fat, keep our costs in check. And it seems like that was more of the main focus this quarter, as opposed to generating revenue growth and obviously trying to go above and beyond, even if you have to spend $2 to generate $1 for a subscriber. It just seems like, in my opinion, that was just put on the back burner for this quarter, and we focused more on efficiency, if you will, profitability. FuboTV's lower than expected revenue projection affected investor mood, even with increased profitability, which helped to explain the notable drop. As it tries to improve its financial situation, the corporation nevertheless struggles with subscriber increase, especially in foreign markets. But again, that's just now, right? Revenue per user. Subscriber count expected to decline by 4%. Again, in my eyes, cross that bridge when you get to it. I like it here at 3. Again, that's just my opinion. And if they continue to beat it up, they bring it back down to the low 2s where it started before we got all this good news, then in my opinion, I would be all over it, but that's just me. Rest of the world, Fubo anticipates revenue 7.5 to 8.5 million, 5% year-over-year decline at the midpoint. Subscriber numbers are expected to drop 16%. Okay, mixed earnings report. Subscription revenue, which makes up most of the top line, climbed nearly 10% from a year earlier with about 6% more subscribers. Again, in my opinion, we're trying to beat this company up when and where we can on any potential negative. And a lot of people are not keeping their eye on the long-term growth and potential that could be coming. Again, a lot of people liked Fubo at $2, $3, $4 before we got the Disney news, as I said. And now you have Hulu coming in under the umbrella, and that's going to add a bunch more people and more revenue. So that's why a lot of people, again, even with the stock pulling back, they've remained bullish, and they said, you know what, I don't care what the stock does over the next 3 months, 9 months, I'm going to come back in 3 years, and this could potentially be, a game changer in my portfolio. 3% year-over-year growth. Okay. But yeah, I want to go over some of these losses. Okay, one second. FuboTV improved its net loss and adjusted EBITDA by $115 million year over year, with net cash provided by operating activities at $97 million and free cash flow at $104 million. Net loss again was 40.9, significant improvement from the 71 million loss this time last year. Adjusted EBITDA for the quarter was a loss of 8.7 million, reflecting a $41.4 million improvement year over year. So we were at minus 50 million on the adjusted EBITDA. Now we're at minus 8.7 million. So again, that's why, in my opinion, I think a lot of people are being short-sighted. And again, I'm not saying this was a stellar report. I don't understand why it's down. Not what I'm saying at all. I'm just saying people are looking at this through two different lenses. And some people are very worried, while others are saying, none of this matters. Watch where it is in a year from now, right? Company ranks among the top 10 most watched video services in the U.S., signed an agreement with Walt Disney to combine Hulu plus live TV with Fubo. Fubo entered a new carriage agreement to create a sports and broadcasting service tailored to sports fans, expected to launch by fall 25 sports season. Fall 2025, meaning August, September, probably just in time for the NFL season here in the States. Fubo's agreement with Walt Disney, combined Hulu, is a significant strategic initiative. The company also expanded its suite of ad formats and launched additional standalone subscriptions, including Hallmark Plus and multicultural bundles. Fubo Sports, the company's owned and operated FAST channel, closed fiscal year 24 profitable for the first time. So again, in my opinion, I am looking at this long-term growth. I am not necessarily personally worried about some of these numbers fluctuating, whether they're up, whether they're down, quarter over quarter. CEO expressed pride in the company's results, excitement about its momentum. They highlighted the company's focus on providing an exceptional user experience and the strategic investments made to support this goal. For Q1, revenue 400 million. This outlook reflects the potential subscriber impact of the recent non-renewal with Televisa Univision. Okay, so again, sometimes we know, sometimes both parties, we butt heads, we can't come in agreement when it comes down to terms of the contract, of the partnership, or whatever. So these things happen. Closed 24 with record 1.59 billion in revenue. Achieved first quarter of positive free cash flow. This is why. Are there negatives? Absolutely. I just feel that the long-term positives are significantly outweighing short-term negatives here. Achieved its first quarter positive free cash flow, improved key profitability metrics by over $100 million on an annual basis for the second consecutive year. Fubo delivered, yep, it's all the same numbers. Rest of the world. Rest of the world includes the results of Molotov, the French live TV streaming service acquired by Fubo in 2021. On a full-year basis, Fubo achieved year-over-year improvements in net loss of $115 million, adjusted EBITDA of $115 million, net cash provided by operating activities of $97 million, free cash flow $104 million, adjusted EBITDA and free cash flow each improved by over $100 million in 2024, marked second consecutive year of over $100 million annual improvements in adjusted EBITDA and free cash flow. Net loss from continuing operations was $40.9 million, leading to an EPS loss of 11. This compares to net loss of $71 million, or a loss of 24 cents a share this time last year. Adjusted EPS excludes impact stock-based compensation. Adjusted EBITDA was minus $8.7 million. Again, this was minus $50 million this time last year, reflecting the company's continued focus on efficient growth, cost control, and achieving profitability. Because again, we spoke about something like a Palantir, the way it broke up and out and continued to climb when the numbers finally went from the red to the black. That's why seeing the slow, steady growth over time and eventually getting to that path of profitability, as Fubo says, that is going to, in my eyes, pump up the value of the stock if and when it happens. Net cash provided by operating activities was $20.9 million, a $20.9 million improvement. Free cash flow was $16.3 million, an improvement of $22.1 million. Fubo ended the quarter with $167 million in cash. Quote, Fubo continued to deliver on our promise to shareholders in 24, achieving record total revenue, paid subscribers in North America, as well as significant improvements in adjusted EBITDA and free cash flow. Notable achievements in 2024 included the launch of standalone sports and entertainment skinny bundles. We spoke about that as well, the customization of the package where you can only watch the sports you want to watch, or, oh, I just want to see domestic sports, so let me see some international sports. As part of our mission to be a super aggregator and expanded availability of our market-first user-configurated multi-view product to Roku devices. We also introduced innovative and interactive connected TV ad formats for brand marketers. As we look ahead to 2025, Fubo remains focused on delivering to consumers an unparalleled streaming service with multiple and flexible content options at appropriate price points. This is demonstrated by our recently announced business combination agreement with the Walt Disney Company Hulu Plus, and our plans to launch a new sports broadcasting service, both of which we expect to further scale our business, deliver additional compelling sports content to consumers, and bring more competition to the industry. We will continue to provide periodic updates as the Disney transaction progresses. 2024 was another solid year for Fubo, highlighted by record achievements on the top and bottom lines, demonstrating further progress towards our 2025 profitability goal. Record revenue and subscriber growth in North America, as well as the achievement of more than $100 million improvement each in adjusted EBITDA and free cash flow for the second consecutive year, are particular standouts of the prior year. We enter 2025 with pride in our results, meaningful improvements across nearly every aspect of our business, and excitement about our momentum. So again, long-term picture, in my opinion, I like it. Here in the immediate short term, again, I'm not shocked the stock went down. We've been down this road before. You can see actually advertising revenue is actually down year over year. Subscription revenue up. Rest of the world subscription. Revenue per user, again, technically up about $1. Net loss from continuing operations, look, was a loss of $71 million. Now it's at 40. We had some litigation expenses. Adjusted EBITDA, again, look, minus $50.1 million. Now it's minus $8.7 million. Adjusted EBITDA margin was minus 12%. Now it's minus 2%. That's why a lot of these fundamentals are moving in the right direction. And that's why if you can see what is potentially coming on the long-term horizon, then, getting a report, oh, subscribers are down this quarter, stock's taking a hit, in my opinion, that is not what you should be focused on. But again, that's just me. Maybe I'm looking at this different than some other people are. Net loss from continuing operations was almost minus 300 mil. Now it's here at minus 177 million. Yep, a lot of these numbers are moving in the right direction. Positive free cash flow. Uh-huh. Mm-hmm. So, again, in my opinion, I do still like it. In the technicals, we did just break down below this 3.5 key level that we spoke about, and we dropped, as we said, we almost hit that 253 fib, we hit 256, and then we bounced. So, we have to see now if they're going to reject it and have it like wedge down to the next trend line, or if they're actually going to now pump it and wedge it back to the gap fill and then break it back down. But in my opinion, as I said, I actually don't mind it here at 3. And if it drops down into the 2s, in my opinion, it's on sale. And if they really beat it up and break it down to sub $2, again, in my opinion, I would like it even more. You guys already know how I feel about Fubo. This previous high right here was 218. So if they completely retrace it down here to this trend line and try to meet up with that previous high, you can potentially see the low 2s, but then chances are it'll probably bounce nicely. But let's check stock charts real quick. I'll let you go. I still, oh wait, I'm sorry. Even if we check the numbers, right, real quick. So, again, I know this is as of last quarter, but the company said what? They got like 165 million in cash, so it's a little bit higher. But, the debt outweighing by, we'll call it about 200 million. But if you recall, they got 200 million to end the suit. So that's kind of a wash. We have liabilities outweighing assets in the short term, and we have the inverse in the long term, which, again, even though it's been ticking down basically quarter over quarter, we do still have positive equity. And if we look at the revenue, we can see, even if we look at out to 2023, again, you're looking at about over $1 billion, 1.07 billion roughly, plus this would be 1.27 billion roughly, quote unquote, fair value. And again, I'm looking back last year. I'm not looking at this year. They said what? They did a record 1.58 billion in revenue, right? So if we use current numbers, it's actually undervalued even more, in my opinion. But we can see the path to profitability, these margins increasing, revenue increasing. And that's why, in my opinion, I personally put fair value of the business. You could easily put it at about 1.3 to 1.5 billion, which would bring us to like 4 and change, 4.5 a share. In my opinion, that's quote unquote fair value. And if you look out and expect even further growth, you could wow. You can make the argument that it could be worth $5, $6. I'm sorry. And that's why, in my opinion, I always said Fubo, should be at like $5. If Fubo goes to 6 or 7, I wouldn't be shocked. And that's why I'm saying that even if we get this to like a $2 billion market cap, you're back at $6. And in my opinion, I really don't view this as an issue. But of course, if you recently bought at 4 and now you wake up it's at 3 and subscribers are declining, again, I understand if you're a little aggravated, so you hit the sell button. It's understandable. But real quick, RSI sub 37 on the daily. We broke down below the 50-day moving average, 336. Bottom Bollinger Band 3.25, so we're down here. And again, if we do happen to gap fill back here, I mean, we're potentially coming all the way back down here to this 200-day moving average of $1.94. In my opinion, I would be all over it, but that's just me. MACD steadily dropping since those highs. And the RSI on the weekly, about middle of the road here, 54.5. You can see the mid-Bollinger Band 2.5. The fib was 253. If you recall, stock hit 256. So you have to wait and see if it wants to retest that level. And then, of course, you're going to have to see if it breaks or if it wants to bounce. But you can see how we have the big spike up, and then we're tightening, and then we have the drop down, right? So we're kind of in this downward channel. You can kind of see it starting, right? And for all we know, we may continue in this downward channel for months and then eventually find our bottom and break up and out. So anything can happen. But again, if we do happen to pull it back, we do have a lot of key levels here in like the 180s and the 190s. So it is possible. But again, in my opinion, I do still like it here, even at 3. You see the curling on the MACD here, potentially heading now towards the downside and a potential cross into bearish territory. So that's going to be something you have to keep an eye on. Again, that's the weekly MACD I'm looking at. But we have a potential bottom here. Well, not bottom, potential support level at this 2.5 mid-Bollinger Band. So that'll be a price that I'd personally be watching for. And again, you have 50-day moving average at 186 on the weekly. And you can see on the daily, we have 200-day moving average at 194. So if they really want to beat it up and bring it back to sub 2, I mean, that's entirely in their own prerogative. But in my opinion, I liked it here in the 4s. I like it here at 3. Even when I got to the PC, I said, wow, Fubo hit 256 today. What a steal. And you can see it immediately bounced back up to 3. Right? So if you were able to kind of time those lows, 255, 260, you already saw a great bounce and a great return just on the same day that it dropped, right? So that's why I'm saying in the immediate short term, they could try to make it volatile and scare some investors out. But in my opinion, I think it looks fine. I really do. And again, 194, 186, 2.5, those are some key levels for you to keep an eye on. But I'm personally not worried. And again, I know I was bullish on it for a while, and I know a lot of you, put a lot of weight into my viewpoint and my opinion, which of course I greatly appreciate. It means a lot to me. But I will say, yeah, I'm not worried at the moment. I'm not scared. If we fast forward 6 months from now, 9 months from now, and we're consistently seeing people cancel their membership and move away from Fubo, then we can analyze the situation differently, right? But also at the same time, if we finalize the deal with Disney, then we're going to have the Hulu business. So, you know what I mean? Where you might see a drop in Fubo, you may see a boost in Hulu. So it's hard to call in the moment, but in my opinion, I do still like it. And of course, if it went lower, I technically would like it even more. But that's pretty much it. I'll end it there. Once again, Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand the markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.